Good evening, this is Paul. Tonight's presentation is Let's Talk Psycho. It is going to be a fairly detailed look about the psychological aspects of trading. Believe it or not, and all the time I've been doing DTS, I haven't really dedicated an event to this. Not that it's not important, it's probably of paramount importance, but it's kind of a second issue for most people. I'll explain what I mean. Here is a quick kind of table of contents. It says that I will discuss why psychology matters in trading, whether or not you think it does or not, an in-depth look at why even when traders learn charts, they may still struggle, and tips on how to overcome these issues. After learning charts, psychology is the next and final step. That's kind of a general overview, but in a sense, the discussion points there are not going to be specifically followed. I'm going to go through a little process here. And I'm going to do some discussion points where I'm going to show you some examples, give you some exercise, ask you some questions, and try and really get across, three goals. And that is, first of all, to get you to understand how important it can be if you don't, to show you how it can affect you even when you think it doesn't, and to give you some tips on how to improve and overcome these issues. I do want you to remember something, that since the issues we're dealing with are psychological, they are, by definition, right between your own ears. So a lot of these answers, believe it or not, are, well, I'll say it both ways. They're as simple as, or they're as difficult as flipping a switch in your head. Does that make sense? Some of these issues? Some of these issues will eventually come down. We can give you all kinds of tips and ideas and suggestions. There are a lot of things you can do, but the final analysis, it comes down to flipping a switch in your head. A lot of these things can be done instantaneously if you have the right attitude about it, the right mental attitude about it, because they are things that reside in your head. Now, as a backdrop, there's things you need to do, I think, to be able to flip that switch. But there are a lot of people that get to that level and they just can't flip the switch. So let's talk about a couple of things before I even move on here. First of all, I have probably more comments than I can even say in 2 hours, so I'm going to try and get in what I can and the most important things. As I put this presentation together, as usual, the thoughts just came overflowing, and I probably have a lot more than I can get to even. Most people come to trading, and a lot of this I just simply know because I've been doing this a while, and I go back to where I used to do free presentations in person, where we'd be in a hotel room, and we'd have sometimes have 30, 40 people come to a hotel room to hear a free presentation the day before a seminar, kind of like what I would do on Friday afternoons. And a very common attitude is, just show me the charts and I'll make money. And that makes sense, kind of. That's what people think. Just show me the charts and I'll make money. But yet, even when people understand the charts, there are issues that come in that stop them from making the money. Just to put it simple, psychological issues are what come in that prohibit people, not prohibit, but they inhibit people from taking a stop at the appropriate area, which lets losses grow. This is especially true when you're new. And later in your development, when you learn to limit your losses, the psychological effects come in on the other side of the equation, where you have a hard time ever getting to a target because you've been beaten up, and you start to realize that you are having a hard time even breaking even. So it comes in all across the board, and if you have the attitude that just show me the charts and I'll make money, it theoretically is true because that is all you have to know. But the truth of it is, for 99% of the people, there's another step beyond that. It's to be able to know the charts and to be able to have the confidence to trust the charts, I guess is one way to phrase that, even though that's not what I had originally intended on saying. A couple of backdrops as to why trading can be an issue with psychology. Everything about trading is counterintuitive. And by the way, if you're newer here, I like and enjoy any feedback. Any light bulb moments that'll be on the screen, any question along the way, don't worry about interrupting me, as long as it's on point to what we're talking about. You notice I always have the room open. Anyone can type. You guys are always respectful, and you can see who's here, and I always do that for you guys. Everything about trading, though, is counterintuitive. It's never common sense, and this frustrates people. Past successes don't help. All of you are, by definition, very successful people. And yet you come to trading and you get frustrated because it's not the same as everything else. Past successes don't help you. And what it actually does, it serves for immediate frustration, which turns to a lack of confidence. And that lack of confidence is what further frustrates these whole psychological issues. Even what I'm saying now, can some of you relate to what I'm saying? I mean, does it just click in your head and make sense and kind of like, yeah, that yeah, I understand that. That's exactly me. It makes sense whether you've been through it and you've gotten to the other side or whether you're still struggling with it. Yeah, I mean, it's true. I mean, certainly a Class A personality doesn't help you. A Type A personality doesn't help you if that's what you're saying. You're right. It doesn't necessarily help you. Believe it or not, that the whole concept of teaching people to trade is tricky because number one, you have to start to accept the fact there's only one way to do it, and that is technical analysis. Period. I will not even entertain a discussion about anything else. I wrestled with this a long time ago. I've wrestled with it several times since then. And instead of being 100% technical, I am 100% convinced the only way to be is 110% technical. There is no other concept or answer, but that's a discussion for another day. I don't want to get there right now. But once you understand it's all about technicals, unfortunately, there's just a certain level you have to hit in technical analysis to make it work. Now, you can't get to the 50% level. It's kind of like being a doctor and knowing 50% of the routine on a heart surgery. You're not going to have a lot of surviving patients. I mean, I don't know why it's so hard for people to understand this, because it applies to anything in life. Any uh, detailed profession, if you only know half of what you're doing, you're going to fail. Doctor, can you imagine being a lawyer and only knowing half of your case when you go to court? You'll get trounced. Any profession. But yet people come in understanding less than half of what they need to in technical analysis, and they can't figure out why it doesn't work. And then their answer, of course, is, well, technical analysis doesn't work. It does, but unfortunately, many people end up being trained in a way, listen carefully, they end up being trained in a way where they are trained to lose money slowly, because that's the best some people can do. And there are many examples of this I can give you. You are trained to lose money slowly. There is a certain amount of aggressiveness that is required, a calculated aggressiveness that is required for successful trading. But you have to have the right amount of knowledge to be able to know what is calculated aggressiveness. Otherwise, you're just taking kind of a guess, taking a stab at it, and that doesn't lead to long-term success. Let's begin with the first couple of things here. First couple of slides here are just some examples to try and stress for you what amazing thing psychology is. And again, it doesn't exist just in trading. For example, I looked this up just for this class. I knew the stat was something like this, but I went to look it up. Successful weight loss programs. Those who lose, oh, by the way, I'm going to ask you for a lot of participation tonight, starting very soon. And I would certainly appreciate if you're not driving on a car phone that you just type some stuff on there to get some participation going. Successful weight loss programs. Those who lose, in other words, to define success, if you lose 10% more, 10% of your weight or more, and keep it off for 1 year. In other words, that's the definition of success for this study that was done. Lose 10% of your weight and keep it off for a year. Only 10 to 20% of the people who set out on a diet do that. Now, what's the point of bringing that up? We're talking about trading. Well, here's the point. The 80 to 90% of the people that don't do that, why don't they do it, everybody? In other words, 80 to 90% of people who go on a diet completely fail. They don't lose anything, or they gain something, or if they do lose it, it only stays off for a short period of time. Why is that? Well, the question is because they do not understand the words that the doctor gave them. Do they not understand what the diet is? Do they not understand what exercise is? Do they not understand what it means? And I don't know what the program is, but whatever the program is, do you not understand what it means to walk 2 miles a day? Do you not understand what it means to eat this certain amount of food? That's not the problem, right? It's not they're too stupid to know what to do. What is it? It's discipline. It's patience, right? Maybe they consider it too difficult, right? There's a learning curve or whatever that they just don't successfully do. But think about the relationship, right? It's simple. Go back to trading even for technical analysis. For those of you that have studied charts, just even somewhat, is there anything in technical analysis that requires the brain power beyond a 5th grade education? I mean, in terms of learning the concepts of what you have to do, the mathematics, the brain power, is there anything that requires more than 5th grade education? Is there? I mean, we're talking about lines and patterns, and it can be, Glenn, yeah, right? But there's no, I mean, Glenn's saying that greater education can cause you more problems. I don't think it has to hurt you, Glenn, but if you think that's going to help you, it can be a detriment. Can I phrase it that way? If you think just because you have a higher education you'll be better at trading, it can hurt you. Right, right. It did hurt you a long time, yeah. But that's the problem is that you don't need, so that can't be the excuse, right? I'll talk about this later. There is simply no debate why techno analysis works. It absolutely works. It just absolutely positively works. So why is it so hard for people to do? That's what we're here to study, of course. That's the question for tonight. Why is it so hard for some people to do properly? Let's say you're day trading and you're using a 15-minute chart. You enter a position on a 15-minute chart. How much total time for the manager's decision should it take to manage out that trade? In other words, if you were to actually summarize or to say to somebody who's sitting with you your thought process to manage out a trade based on a 15-minute chart, how much total time, thought process, give me a number, somebody, to manage out a 15-minute chart. You take a trade, you're going to hold it for a couple hours, 3 hours. There's a certain management process you may go through. And throughout the entire course of that trade, how much do you have to sit there and calculate, decipher, figure? What's the total time? Yeah, I agree, guys. 30 seconds, a minute. Great answers. Right on track, right? So let me ask you something. If you're staring at the chart for all 3 hours, what are you doing with the rest of that time? I like some answers. What are you doing with it? Because we all know, right? We look at it for more than 30 seconds, right? Right. You are again, listen to my words real carefully. You are opening the door. You are opening a door that doesn't need to be opened. You are opening the door to screw it up, to second guess yourself. You said all the right things, right? You have to come back to the question, why are you doing it? We'll talk about it more in a minute, but this is a big psychological issue. You know what to do, right? Managing a 15-minute chart, there's different ways to do it. I teach very specific. I think I have great ways to manage charts. I think I have unique ways. But you know what? Any way to manage a chart would work okay, right? But nobody follows anyway, right? Everybody sits there and they stare at it and they come up with some excuse to abandon the plan that they maybe have or don't have, or maybe their plan is to sit there and watch it. And I'm reminded of, yeah, I've told the story before, but it just shows the extreme psychological problems we have. I don't do it in the room much nowadays, but it used to a while back. Sometimes you used to have kind of a contest. Okay, who got it to the highest number? Or, if you have a really good trade, and a lot of people were in it. And I remember one time we had a really nice trade, and somebody said that they, it was a 3 or 4 hour trade for the day. And somebody said, "Oh, yeah, I lost a little bit on that one." And I'm like, "You lost? How did you lose on that?" And he said, "Well, I got out of the trade when the futures tanked shortly after we got into it." And I'm like, "When the futures tanked? When did they tank?" And he tells me the time, and it was like one red bar on a 1 minute chart. And we're taking like, a 3 hour trade. See, so that's the psychology that comes in. He didn't care about the plan. He didn't even care. He was following me allegedly. He didn't even care what I was doing. He just saw the stock started to go up. It started to come back down again. He thought he was going to maybe stop out, and boom, just exits because of the market crashing. And of course, crashing was hysterical because it was one of the most bullish days around. So, do you know exactly what you're looking for? Again, same question. How long does the total process take to enter a trade? It's the same answer, right? If you know what you're looking for, you go and find it. Boom, boom, boom. Couple of quick calculations in your head, and boom, it's a 30-second process, right? So if you want to take 1 or 2 trades a morning, and you're in one, and you have a second one you're waiting for, I mean, why are we staring at the screen all day? Again, don't get me wrong. I'm not saying my way is the right way. That's, I like to take 2, 3, 4, 5 trades a day. That's it. I have nothing wrong with somebody who wants to take 10, 20 trades a day. If you're making money, that's great. But again, my point is, if you've got your 20 and you're done, why are you still looking at the screen? Whatever the number is. In other words, you should be there. You should be there at the right time. You should hit it hard, get out, be done, and then do what you're going to do. But don't continue to open the door to have troubles. Psychology, a real short excuse. Reverse engineering has you looking at all the wrong things. I put this in here because I think it is one of the kind of psychological problems that happens. Reverse engineering. What does that mean? What that means is somebody looks at the end of the day and they go through the big gainers list, right? And they say, oh, we missed this and we missed that, and oh, I should have got this and I should have got that. And they start going back and looking at all this stuff that they could have, would have, should have had. And then they start saying, well, this is what I want next time. For some reason, they think they have to get the stock that moved 20%. Well, it's nice if you get that, but you don't need to do that. You can make well over your daily goal every day just playing normal stocks that have normal moves, right? You're guilty of reverse management, really? And what it is, it becomes a substitute sort of for just understanding technical analysis. Instead of understanding what to do, people go back and they try to say, okay, here's this huge winner. How can I get this one next time? How can I get the number one move? And sometimes people even say to me, I'll have a good trading day or something. They'll say, like in an environment like this, sometimes someone will say, oh, Paul, did you get blah, blah, blah? It moved 32% today. I'm like, no, I didn't even see it. It's some $2 stock that went to $3. I mean, who cares? Why do I need to see that? But this is what people get all hung up on. And trading to them becomes trying to find a way to find out and play these obscure stocks. What did I put on here? You're chasing anomalies that you'll never find. So they say, oh, okay, boy, this stock had this huge move because they announced a new drug. Okay, gee, that's what I have to find now. I have to find stocks that announce new drugs and they'll have these big moves. And the next 5 times they don't. And so, I guess it wasn't that. Maybe it has something to do with the chart. Oh, it went to a new weekly high. Okay, that's it. I got to find stocks that gap to new weekly highs and they'll be all winners. And it doesn't work either. So it's constantly a substitute for trying to learn what you want to do. And I think it's a psychological issue because, again, it's a substitute for doing what you're supposed to do. Now, listen to this next one too, because again, I see so much of this. Your brains, and this is the last slide like this. I'm just trying to, again, give you some concepts of the various ways that your brain can hurt you when you're doing this. Your brain's process of selective perception will prevent you from ever changing unless you take proactive steps. Does that make sense in and of itself, just to hear those words? By the way, a lot of the stuff in here, I sent the last email went out, I put a quote in there for me that was, there's a lot of stuff in here I haven't really said before. As I went through and prepared this, a lot of fresh thoughts came in my head. And all the stuff you hear from me, it's all out of my head. This isn't something I read somewhere. But your brain's process of selective perception will prevent you from ever changing unless you take proactive steps. Make sense? I mean, you whatever it is, you feel the market should be falling because PE ratios are at 32 and blah, blah, blah. And you have this opinion in your head that this stock just had this new invention. It's got to go higher and the market's too high and it's got to go lower. And what you do then is everything you listen to. Yeah, I am, Dave. I'm kind of doing that right now. So what selective perception means, Dave, specifically is that your brain, by definition, will let in and hold in its memory anything that affirms what it already believes. It's the way your brain works. And anything that contradicts what your brain believes firmly, it'll dismiss. It's a protective measure your brain does. It's good in a lot of ways, but it's bad for trying to learn something. Right, confirmation bias, right? Same thing, yeah. And you see it in politics like crazy, right? I don't want to talk about politics per se, but just as a concept. Republicans listen to nothing but Republican stations, right? And it reaffirms what they think, and they think Democrats are idiots. And Democrats listen to nothing but Democratic stations. They think, so you just keep hearing your point of view over and over and over again, and you keep hearing why the other side is wrong. And it's a very bad thing when you come to something like trading, where you have a view about a stock or a market or whatever it is, and what happens is you start listening to those things that affirm what you want to believe, right? So you start thinking, a month ago, the market, well, that'd be a bad example. You start thinking back in January, the market has to go. What am I trying to say? You start thinking back in January, the market has to go lower. It has to keep going lower because the president's this and because Congress is that and because we just have tariffs and we have this and that. Market's got to go lower, got to go lower, got to go lower. And what happens then is you hear news reports and you hear, tariffs are really bad for the market, and that clicks in your mind, and your mind adds it to the little category. Okay, market's going lower. But then you hear something that says, well, but the market's oversold, but you say, well, that's some idiot saying that. Who cares? He doesn't know what he's talking about, and you ignore it. And it's really the opposite of saying, look objectively at every situation, reanalyze every situation, and come to a clear conclusion. Yeah, exactly, Peter. Yeah, exactly. Right. I heard on a news report just the other day. No, that wasn't a news report. Some guy said that. What's his name? I know his name, but I forgot right now. That he's a bumbling idiot, a fraud, and a scammer, and Tesla is worth zero. That was the comment, right? And I've been saying that for years. But how does that help you? If you've been shorting Tesla, for the right time, you're in a lot of trouble. So that's why charts are so important, because they keep us objective. They keep us looking at what is really happening, not what we think should be happening. Notes to myself what I say here. Yeah, the opposite of selective perception is to be objective in everything you do, to keep an open mind, and to use an objective process. Okay. One more thing about psychology in trading, and it's one that I like to use, that you have to believe me that this is true, because I would have no reason to lie about this. Going back for me for years and years and years, before DTS, all the times I've been teaching, training people, naturally, a lot of people who get trained don't make it. You know that, right? A lot of people just don't, for whatever reason. They didn't get it, they gave up, whatever it is. And all the time I've been doing this, it would be expected, and I would expect that several people would come back and say, I don't think this stuff really works. That's what I would expect. Out of hundreds of people, and a lot of them fail, somebody's come back and say it did. In all this time I've been doing this, I'll honestly tell you, nobody has ever said that to me. Never. And I would tell you, because it's almost unbelievable for me to say that, right? So I wish I could tell you the truth and say there was, but nobody has ever said to me, Paul, I failed, and it's because I don't think this chart stuff works. What is it that every single person has said? Now, again, I don't hear from most of them, but sometimes you get an email from somebody who said, Paul, I've got to move on. It's just not working. And what do they say? Why did they quit? Why did it not work for them? It's the same answer. It comes in different shapes and forms and fashions, but it's the same underlying thing every single time. What is it that they say? What is it that they say? Close comment. More specific than that. They do say something. Well, it's even more specific than that. No, they don't say the market stinks. But you know what? Because the thing is, they see this work. But what they end up saying is that one form or another, I couldn't get myself to do what I was supposed to do. In one form or another, right? I couldn't get myself to do what I know I'm supposed to do. And I screwed up one too many times, and I hurt my account, and I got to back off for now. But if I get another chance, I guarantee you I won't do that again. It's always an optimistic ending. I know what to do right now because I let my discipline down and I screwed up. That's always what they say. Always. There's literally never been one exception to that, which is amazing to me. But again, it shows you the psychological issues. Now, I think a lot of those people actually did fail because they never really did learn charts as well as they should have. A lot of people, I think way back, people used to take one class and that was it. There was no retake. It was one basic class. To be honest with you, the first class I ever took, which was the total for me initially, I don't think it was even 1/5 of what I would teach right now. And I can't imagine somebody going out in the marketplace with less than at least 80% of what I know, right? Oh, absolutely. Absolutely, Gary. I'm going to go through some of these things now. Let me open your mind to one other thing. We're going to get into some other stuff here, but I want to expose something to you that's one of the first steps to eliminating the problem. And it has to do with your trading as a business. Let me run through this with you. And again, some input here would be great. On Monday, let's say you have a $500 risk amount. You start off the day down $1,800. You're day trading, and the morning is terrible. You're down 3 or 4 times your 3 or 4 risk units. Terrible day. You shake your head. You start clean. You say, you know what? I'll do one more. And you get a good trade. You keep chipping it back, chipping it back, chipping it back. And you know what? By the end of the day, you get almost all the way back. How do you feel at the end of that day, everybody? You've been there. You've been day trading more than a month. You've had a tough day, and you've brought it back to, maybe you're not green, but you took a bad day and you brought it down to nothing. You feel great, right? So would I. Everyone does, right? You got a big smiley face. Yay. You're happy at the dinner table. You're happy, right? Think about yourself at dinner. That's always the way to judge your day, right? You're happy. You're talking. Yeah, good day today. Tuesday, you come in and you kill it right out of the gates. 1,900 bucks, right? 10:30, you're up 1,900 bucks. You go, you know what? Let me take one more trade. Boom, you lose. You try and get it back, you lose. You lose. You keep chipping, you keep giving it back, and you end up giving almost the whole thing back. How do you feel at the end of that day? Yeah, there's nothing worse, right? I mean, to make way over your goal and then to end up down there, you feel really, really bad, right? Big, big sad face, right? But what I want you to realize about this now, only about 10% of you are really going to get slapped in the face with this, like really hit home. A lot of people don't quite get this. And for all these slides, a lot of you won't get everything I have to say. It depends kind of where you are. But I want you to think about this. So you're sad about making $100 and you're happy about losing $100 is what you're telling me. Is that correct? As long as you do it the right way, in a way that makes you feel good. True? Every single one of you said you felt good losing $100 and bad winning $100, right? You all agreed, and I agree too. I'm not saying you're dumb. I agree with you. I'm pointing out a big human flaw we have. Now I know there's a lot of things you can say to me as to why you felt happy. I understand all that. I've been doing this a long time, but nevertheless, you see this little guy in the right here? That's Mr. Spock. He would disagree with this whole thing, right? How can you be, if you eliminate how you got there, how can you be happy about losing and sad about winning? It makes no sense on one very objective way of thinking. And the real question needs to be, how you handle the situation, how you got to where you got. Did you do what you're supposed to do along the way? Now, a lot of people don't really grasp the terrible reality of this slide, at least not at first. But it means to many traders, they'd rather be entertained than make money. It's akin to a gambler syndrome. Does this slap home with any of you? Don't be afraid to speak up. Nobody knows anything but first names in the room here. Well, apparently a couple of you know each, but does this slap home? Again, maybe in the past at some point, maybe now. But this is a big deal, right? Most people would rather be entertained than actually make money. It's true, Carmen, but that's kind of the bad process we get our mind into, is that we're always happy digging out of a hole. Something I didn't put in, again, there were so many more topics I didn't even put in here. But there's this whole loss aversion test you can take. And many of you probably have done it. Matter of fact, you might want to Google loss aversion and take the test yourself. But there's this amazing thing where, and I didn't put this in because I just wasn't out of time, but there's this amazing test that you take where you're given two questions about whether you would build on a profit or expand a loss. And the odds are heavily skewed one way, yet everybody answers the question the other way. Everyone, virtually everybody will answer the question the wrong way based on probability and statistics. It's just problems we have as traders that we have to try and deal with. Your trading, investing has to be your business. You have to treat it as such. Nothing but pure objective thoughts. This is not entertainment. This is not fun. It's a business. And I don't care if you're, when I'm talking, I'm speaking absolutely equally to whether you're a patient day trader, whether you're a hyperactive day trader, whether you're a long-term investor. It doesn't matter. These issues do dominate throughout everywhere. Now, I will say that for most people, day trading has higher psychological issues. And it's only because you don't have the time to back away. See, when the market closes, we all kind of return to normalcy. And if you're swing or long-term trading, you have this long period of time where the market's closed and you can actually function like a normal human being. When the market's open, you're in a trade, you're not thinking properly. So the day trading aspect of it is usually more burdened with psychological issues. Yeah? And that's what I'm saying. The more important issue was whether you did the right thing, period. In other words, maybe that day you were happy, you were never supposed to be in that position in the first place, right? That's my point. Part of that thing where I said was it's not just a matter of whether you feel happy or whether you feel sad. The question is, as an objective level, Did you do what you're supposed to do on that first day? On that first day, were you ever supposed to be down that much? Who cares if you came back? I'm not saying you should or shouldn't. I'm not giving you the rule. I'm just saying, should you have been? And on the second day, should you have been still trading? What's your rule when you're up 3 times your goal? What's the rule? Are you supposed to quit? Are you supposed to take one more trade? Do you allow yourself to give it all back? That's what's important. Well, Gary, I was going to actually say that Gary's kind of funny, and I don't know if I should say it now or not, but I was going to say the comment that if you're still high-fiving the good trades and throwing the stapler at the window on the bad trades, you're not at this level yet. Here's a way to look at something, Gary, that I kind of have said in the past that I think maybe is helpful. Again, all these comments, sometimes people hear a single comment and it changes them. It's the weirdest comment can change somebody. But when I have a losing trade sometimes, Gary, I'll say, you know what? I'm glad I had that losing trade. You know why? Because I got it out of the way. I know I'm going to have some certain amount of winners, I'm going to have a certain amount of losers, and I just got the loser out of the way, and I know statistically I'm in for some winners now. So, it depends on your attitude about it. Your business. Oh, Alfred, hi. When the market opens, the idiot. Yeah, I'm going to talk about that in a minute. Yeah, that line is unquestionably a quote from me. Nobody else in the industry has that quote other than me. The idiot takes over. Yeah, I'm going to talk about that in a couple of minutes here. Your business. Have the knowledge to be able to come to the day as a day trader or the week as a long-term trader prepared. Just a couple of quick blurbs here. There's nothing terribly important on these here. Prepare your employees for the day. Don't have any employees? Yeah, you do have an employee. Your employee is you. And the relationship I like to try and express is that when the market opens, we all turn into babbling idiots. We all do, to some extent, right? You can't avoid that. Some people try to make is they say, well, I'm not going to turn into a babbling idiot when the market opens. You're going to. You always will. That'll never change. Some idiots are maybe smarter than other people's idiots, but we all turn into babbling idiots to some extent. The thing that you have to start thinking about is controlling the idiot. In other words, I like the relationship to think of that person, the idiot, that is at the keyboard at 9:30. Think of that as your employee. Most of you, probably more than half of you, have been in a position where you've managed employees at your own business, as being a boss, as a sales manager, whatever it was, right? Most of you probably have. How would you handle an employee? Give me some examples. How do you handle an employee? You have an employee that's new on the job. He's about to start doing a job. What's one of the first things you would do for that employee? He's going to go on the assembly line at a car plant, whatever it is. He's about to go make sales calls to sell detergent, whatever it is. What's one of the first things that you, and I bet you 80% of you, if I asked, have been in charge of employees, right? Yeah, keep them safe. We don't care about that. Come on, go back to the 80s. We don't care about the 2019. Keep them safe. Come on. Go jump between the cars and do what you got to do. Take that motorcycle 100 miles an hour down the middle of the road. Just get the job done. Seriously, what will we give that employee? A set of instructions to do his job properly. Yeah, train him on what to do. How about a list of your job duties? What are you supposed to do? How are you supposed to do it, right? Initial training, right? In other words, a list of things that you can and cannot do, what you're allowed to do, right? How much discretion do you have on the job? If you're in an assembly line and this car is coming by and you're going to put the door on, right? This drill is going to come down. This little power tool is going to come down on a cord in front of you, and the door comes by and boom, here's a bucket of screws. You take this bucket and you boom, boom, boom. You zip in 5 screws. Boom, boom, boom. You zip in 5 in the bottom. Boom, boom, boom. You do this, you do that. You put some oil here, whatever it is. And that's what you do, right? Does the employee get to put in only 4 of the 5 screws? Is that allowed? No, it's not allowed. Does the employee get to decide to put the bottom hinge on first when that could make the door crooked? No, he doesn't get to do that. Could the employee use his left hand or right hand? Yeah. Could the employee, there's certain things that would be very small purview within the employee's allowability what to do, but he has to follow what the general purpose is of the company to do. Have you done that for yourself? In other words, we know we're going to be idiots. Do we direct ourselves well enough what to do? And of course, it's called a trading plan, but people get so turned off by that term. But forget the term trading plan. How about, do you know exactly what you're supposed to be looking for? Because you're not going to be looking for it, right? The idiot's going to be looking for it. So we have to give them very, very specific instructions of what to do. Do you know that when you enter a trade, How much actual thought process should the idiot have to manage that trade? The answer is basically zero. Any trade can be managed retroactively, remotely. It can be remanaged before you're in the trade, right? You can come up with a plan to manage anything based on objective chart things before you even get into it. So the idiot shouldn't be sitting there trying to calculate how to manage something, right? Now, there's certain things that the idiot may have to do. If we were to write a trading plan that would eliminate all detail from the idiot, it would be 700 pages long and nobody could follow it, right? There comes a point where we turn some little things over to the idiot, right? What do we turn over? Well, we're going to say that, blah, 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 the stock's going to rally, and when it gets really close to that base, we're going to short it. Well, what is really close? Well, we'll let the idiot decide that. We could give them a percentage, but that's going to vary from stock to stock, right? And we can kind of say, well, you know what? We want the stop to target relationship to be this and this, but what if it's a penny short? Or do we do that? As some, the idiot's going to make some small decisions, but they're small decisions. They're not the big life-changing ones. What else do we do with an employee, by the way? At the end of the day, at the end of the week, at the end of the month, what else do we do with an employee? Something that virtually no trader does for a long time. What else do we do with any employee? Yeah, review what they did to see if they did the job they're supposed to do, right? Did they do it well? Did they not do it at all? Are they only putting it, right? If you had a new employee on the assembly line, wouldn't you as the boss come down to the assembly line after the first couple hours you do in cars and take a look at that door? Is it on straight? Are all 5 bolts in? Are they all torqued the right way? Is it oiled properly, right? Whatever the job was he's supposed to do, you would check and review. And if you only put 3 bolts in every hinge instead of 5, what would you do? You come back and you take a socket wrench and crack them over the head and say, do it the right way, right? At least that's what you would have done a long time ago. Have the patience to follow a plan. We're going to talk about more about that in a minute. And have the discipline to do what you're supposed to do when things go wrong and when they go right. We're going to talk about that more in a minute too. Yeah, exactly, Mark. Again, like almost any comment you guys say, I can tell you a whole story about it, right? And what you say is exactly right. Because you know what people do? Filling out sheets and checking your trades. You know when people do that, Mark? When they have a good day, right? That's when they decide, okay, let's see what we did today. Oh, I did that right. I did that right. Oh, yeah, I made $1,500 today. What a great day. But you have a bad day, what do? You ever get behind in your results? You know when you get behind? It's when you had some bad days. You just sweep it under the carpet and say, let's just forget about this. And then, well, I didn't do it for that week. We'll just forget about it. But you know what? That is the goal that you're missing. That is the goal, because there's no better opportunity to learn than to see the mistakes that you yourself made. Here's another psychological question for you. For those of you, the question is only for someone who has been trading for a while. Everybody give me an answer here. If you have been trading for a while. Yes or no? Can you remember a really great day you had? Everybody, whether you're good or bad, most everybody's had a great day, relative to you, whatever it is. It may be our units or money or whatever. You can all remember a great day. Okay, great. Question number 2. Can you remember like the bad day? The oops, the wheels came off day. Can anybody remember that day as well too? You know why this nickel is here? Because I'm going to bet you a nickel. Everybody, let me put everybody stop for a minute. Everybody done? Boom, 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 boom. I'm going to bet you a nickel that those 2 days are within 5 days of each other, if not back to back. True or not? It won't be true for everybody, but I bet you it's going to be true for a lot of you. Were those 2 days, your best day and your worst day, close to each other? Were they within 5 days or even back to back? Yay, nay? Well, I usually get about more than half right on this. Yes, yes, no, no. Yes, yes. There we go. There we go. There we go. 4 out of 7. Keep it going. Years ago? Okay, you don't even remember probably. All right. There we go. We just started with those no's, get them out of the way. All right, we're at 67% right now. Yes, we're over 70%. Because they're recent. Okay. Why is that? Why is even for what you saw now? Isn't that amazing, everybody? You're trading for weeks, months, years, whatever it is, and the 2 most important days of your life are within back to back. Isn't that amazing? It's not amazing when you think about it, because there's only ready for this? There's only 2 times the psychology affects your trading. There's only 2 times. It's not on the slide, so I'm gonna have to type it in here. You ready? When you win and when you Lose. I think I made a typo there. That's the only two times. The only two times it matters. If you're looking at it funny and saying, Paul, isn't that every time? Yeah, it is. It's supposed to be a little bit funny. But when you are losing, well, let's do when you're winning, because that's what I was talking about here. When you're winning, what do? You feel that you are God, right? You feel that you can read any chart, do anything you want, you're going to make money because a few trades went your way. So you start over trading. You start pulling out the calculator and thinking, boy, I'm going to be a millionaire before the end of 2020 and blah, 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 blah. And you start going crazy. You start thinking, boy, the market is a money machine. All I have to do is keep doing this, and all of a sudden you start losing. And once you start losing, there's no worse feeling. There's no worse feeling than giving back profits. It's often a worse feeling than losing outright. Because when you give back profits, you've now done a lot of work for nothing. In other words, it seems like there's no hope anymore. What about when you lose? Well, when you lose, we all know what happens then, right? When you have red on the screen, you will do anything you need to erase the red, right? Double the risk amount, double the number of trades. As a matter of fact, you will instantly look for a trade to overcome the red on your screen, right? And of course, when you do that, you're not trading according to your plan. You're not looking for the best trade. You're looking for any trade, right? These are all the issues that affect us. I want you, here's a new topic you may have never heard me talk about, and I think it's a big one, at least not directly. I want you to think about this, and again, this starts with a well-rooted concept about the human brain. Your mind hates the unknown. Is that correct? Your mind hates the unknown. Is that true? It hates the unknown. This is really a big deal in trading. I want you to think about this. Ever been waiting for bad news? You have to wait a long time. It tears you up. Even if the news is bad, your brain immediately goes about handling the situation. Things immediately start to get better. Even getting the bad news is usually better than waiting for the bad news. And again, you know, we've all been through bad news, and I don't mean to take away from anybody who's, whatever it is, lost a loved one or whatever it is, but the waiting to know if you've lost a loved one is worse in a sense than when you know, because you start dealing with the situation or whatever it is. You know, your brain has a way of immediately starting to rationalize, recover, and do what it needs to do, right? And the unknown tears it apart. And even if you disagree with the fact that maybe it's not worse, the unknown tears your mind apart because it doesn't know what to do. It can't handle this. It's like spinning its wheels. It doesn't know what to do. It can't handle the situation, right? Even take a similar one that I can relate to really well, and maybe some of you of the male persuasion relate to this as well too. You ever been shopping for someone else and you don't have a clue what you're looking for? I imagine it works both ways, but I know, and again, I don't mean to, in today's day and age, I don't want to be sexist, but I do think there's a difference between men and women, and I have to think more women like shopping than men. I hate to be old-fashioned, but I think that's true. Have you ever been shopping for somebody you don't know what to get? Anybody? Isn't that just terrible? I mean, I hate that. Maybe it's just me. Isn't that terrible when you don't know what to get? But even if you don't like shopping, if you know exactly what you're looking for, it's not that bad. I'm not a big fan of shopping, you know. But if I know exactly what I'm getting, I don't mind. And if I'm looking for myself, I don't mind. But it's very stressful to me to go looking for something when I don't know what I'm looking for, right? When I don't know what I'm looking for. Think about that. Imagine trading. How does your brain handle it when you don't really know what you're looking for? Think about that. How does your brain handle it when you don't really know what you're looking for? Now, when I say don't know what you're looking for, your brain can't react properly to, I'm looking for a winning trade. I'm looking for a good setup. I'm looking for a good chart, right? That's just like saying, well, I need to buy a present for somebody. Go buy something nice. Go buy something fashionable. Go buy something he or she would like. Well, that's not helpful, right? You see the analogy? Your brain needs to have exactly what it is you need to get. You know, the blah, blah, blah shoes in size 7 and tan, whatever it is. And it's the same thing in trading. You should be out hunting for a setup. You should be out looking for exactly what it is that you want to find, right? But instead, oftentimes the setups are hunting you. Do you ever feel, guys, when you are watching the charts, do you ever feel like you're watching TV kind of? And you're just kind of staring at the charts, just kind of hoping, waiting something will jump out at you? Have you ever been doing that? Where I'm saying you're not even really sure what you're looking for, but you're just kind of out there hunting around and you're not even sure what it is you're looking for. This is a really, really bad thing. I call it watching TV. It's a really bad thing. It's not what we do. If we are always just out looking for something, the stocks are hunting us in a sense, and they will always be leading us in the wrong direction. There's so many times somebody will identify for me in the room a pattern that was a good pattern, but it's way too far past it for me. I had to be there waiting for it. I had to be there hunting it. And when it stepped into the right position, boom, I had to be there for it. When it's blah, 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 this far past it, it's no longer okay. Now the stock is leading me around and is trying to drag me in at a spot I don't want to get dragged into. Can you relate to some of these examples, everyone? These are part of the issue is, the next slides are about how to improve on this, so I'm not leaving you hanging here totally. But understand, a lot of the improvement process, like I said, is between your own ears, right? Light bulb, love it, good. So to me, a lot of it is just identifying what some of the problems are, because some people don't know what the problems are. If you're just staring at the charts every day and you don't really know what you're looking for, you are going to get aggravated, frustrated, and you're not going to have a good time, and you're going to lose. You need to be in charge of the total situation, all the stuff we talked about so far. So how to improve? As I thought about the way to phrase this, I thought there's nothing better than what I use as my definition of trading. And some of you may have heard this before, I don't know, but here's a sentence that I want to parse through 1/3 at a time. My definition of trading/investing. It's having the knowledge to know when the odds are in your favor, having the patience to wait for that moment, then having the discipline to handle the trade properly when it goes in your favor and properly when it goes against you. How do you like that definition of trading investing? We're going to run through each of those lines real quick, but how do you like that for a definition? All right, let's take each part of that real quick. The knowledge to know when the odds are in your favor. Now this is a fairly simple one. This is the least psychological one, but it becomes psychological if you don't have the knowledge, right? This comes from just a complete understanding of technical analysis. Period. That is the only way that we, meaning us, 99.99% of the people, make money. And to do it, the tool that we use is technical analysis, and that tool needs to be perfectly understood. Technical analysis is very learnable, but few ever fully understand it. Technical analysis works, period. It gets the odds in your favor. That's the whole job that we ask of technical analysis, to get the odds in our favor. And it does it unquestionably well. Inside of technical analysis, I'm wrapping up the whole concept of understanding charts, understanding the math in charts, understanding the whole moment in time, reward to risk, all that good stuff is part of what I teach. But you in order to really understand it, in order to really be able to overcome the psychological issues, you have to understand your topic. Let me ask you a question. Give me a one. How many of you have ever spoken in large groups? Give me a one. How many of you have ever spoken to large groups? Large meaning more than 15, whatever. Okay. Here's how I feel about it. Tell me on a scale of 1 to 10 how much you agree. 10 being you agree totally. If I don't know my topic well for some reason, I'm scared to death. If I know my topic well, I am completely fearless. I am as comfortable as sitting there talking to my wife. When I do talks on trading, and I've done this in groups of large people, I am completely calm at rest. I'm completely, absolutely, positively. They say that speaking to a group is the number one fear for human beings, period. No, that's a good question. No, to know and believe it. Yes, to know and believe it too. Yes, I'd agree with that. You have to know it and believe it too. Yeah. Yeah, you couldn't be up there. Yeah, because if you didn't believe it, it means that you know there's a hole in what you're saying, and you'd be fearful that that hole would be exposed. So yes, you have to be able to, up there in any situation, anything that comes up, you can stand there and say, no, you're right, you're wrong, here's why, and have an argument that's unbeatable. See, that's how I feel about anything I talk about with trading. And when was it? Before trading, I used to also talk in groups before my trading career, but there was a time I remember I wasn't terribly confident. It was very nerve-wracking. It was because you're afraid a question's going to come up and you're not sure you know the answer, right? And if you think about that, think about how that applies to trading again. The reason you're confident talking in a group of people is because you have complete comprehensive knowledge of what you're talking about, right? Well, how can you expect to be able to be non-fearful in trading if you don't have complete mastery of the subject matter? Does that make sense? I'm not sure I phrased that perfectly the way I got into that, but does that make sense what I said? If you want to eliminate fear, you have to be able to totally understand what it is you're doing. You can't be done with the trade and say, well, gee, I don't even know if that was a good trade or not. It didn't work. Maybe it was a good trade, maybe it wasn't. It just leads to complete confusion and frustration. So that's number one, is the knowledge to know when the odds are in your favor. That is purely, so how do you fix part one? That's purely a matter of learning technical analysis, period. There's nothing to it. If you've learned it and you're comfortable with your knowledge level, great. If you haven't, well, then understand you're not ever going to be comfortable or do well until you learn it. There is no shortcut to it. I'm not going to go into the whole conversation, but people try to shortcut it, have at it, have fun, but eventually you will have to learn it properly. There is no other way. Number two, the patience to wait for that moment. What a big one this one is. And this is where psychology starts walking in the door pretty heavily. Patience is a learned skill. Perhaps the best way to learn patience is to not have patience until you get mad enough to fix it. Does that comment strike home with anybody? I'm reminded of the book Market Wizards, where he interviewed 25 successful traders and tried to find the commonality between all of them. He found out they had nothing in common technically, but one thing that they did have in common? They all lost half their account before they got so mad, so frustrated, that they dug in and said, I'm no longer going to trade sloppy. I'm no longer going to do anything that pops in front of me. I'm going to start following a precise plan. I'm going to have the one thing they had in common was, and I think the book even uses the word patience, they all had the patience to wait for a particular little setup, and that's what they focused on. They were all different setups. No two people out of 25 had the same setup on a chart they looked for, but they all had the patience to wait for that setup. Does that hit home with any of you? The patience to wait for that moment. Patience is the capacity to accept or tolerate, delay, trouble, or suffering without getting angry or upset. Now here's a big comment for you. How do you get patience? Well, when you understand knowledge better, you will begin to see the value better of waiting, i.e. patience. You will learn patience if you learn knowledge, guaranteed. That comment to me, I'm not sure will hit home with you. That comment I literally created when I did these slides. I have never said it before, and it hit me as being absolutely true. You have any comments on it? When you understand knowledge better, you will begin to see the value of waiting, which is patience. You will learn patience if you learn knowledge, guaranteed. In other words, if you don't know the setups, if you don't have the knowledge to properly see what you're supposed to do, you don't even know what you're waiting for. Does that make sense, or the other way to phrase it? It's not until you see the beauty of what there is to wait for that you then become encouraged and regimented to wait for it. Is that another way to phrase it that hits home with some of you? This is such an important line. This ties these two together in a way. Yeah, these ties these two together in a way that, and I know that every word I say and every slide that I go through, I'm not going to hit home with all of you. I understand that. It just can't be that way because you're all different levels, and some of you are absorbing this like, wow, this is great, and some of you are kind of like, this is too abstract for me, and I get that, but just bear with it. It's stuff you'll eventually appreciate, I think. But no, thanks, Davis. But the easiest way to have patience is to know the value of what you're waiting for. And the only way you know the value of what you're waiting for is to truly understand the setups on the charts. Another light bulb. Love it. And number 3, the discipline to handle the trade properly. When it goes in your favor and when it goes against you. Let me ask you, which is the bigger problem for people? Discipline when the trade goes in your favor or discipline when the trade goes against you? There's a definite answer to this. Well, the answer is you're all right, but somebody really sharp would maybe give me when each one is correct. For new traders, the discipline issues are when the trade goes against you. That's for new traders, right? But see, that is not a long-lived problem. See, the reason it's not a long-lived problem is because when you don't handle the trade properly, it goes against you. What do you end up with? What do you end up with? Well, no. Well, yeah, okay, no, you end up with a big loss. Yeah, I mean, yeah, I guess you end up with no money eventually, but I mean, at the end of that trade, you end up with a big loss or a bigger loss, right? And you can't ignore it, right? In other words, if you're a new trader and you start taking these big losses, you're taking these big hits to your account, you can't ignore it, in other words, right? It's like walking around with like a 5-pound goiter on your arm. You can't ignore it. It's there, right? So you have to do something about it or you're dead. You understand what I'm saying? So in other words, you have no choice. As a new trader, you're either out of the game almost immediately or you learn, hey, I can't keep doing this. You're forced to fix it. Yeah, you must admit you're wrong. You can't avoid it, right? It's like you're caught red-handed. There's no excuse. But what about the other way? Once you fix that, what about the person who has poor discipline handling a good trade? And what does that mean to have poor discipline? It means that you have a really nice trade that moves 80 cents in your direction. You expected to get 60 cents of that as your target, and you took 12. How does that show up on your record? If you take 1/5 of the target you were supposed to take for no reason, you just were impatient, you said, I can't take it anymore. It shows up as a win. Is that a big glaring problem? If somebody walked by your desk and looked on your chart and said, oh, you got a win there, would that be a problem to you? Well, it is a problem, but it doesn't appear to be a problem to you, right? You see the distinction I'm making? Is that, in a sense, initially, handling trades that go against you is critical to fix, but people fix it. You have to, right? You can't walk around with this big goiter on your arm. You got to fix it. But then the later problems about handling trades improperly when they go with you, they're very subtle problems. You had a winner. I had 3 out of 4 winners today. I'm doing well. Yeah, I lost money, but I had 3 out of 4 winners. How much money did you make today? Oh, I had 3 out of 4 winners. How much money did you make? Well, I lost a little bit. How did that happen? Well, the winners weren't all that big. You see, that's the problem. It's like a cancer that you don't see until it's too big. And you realize that you maybe this is where you could have a good trading style, you could have the knowledge, and you could have the right chart patterns in front of you, and you could be doing the right things. But the winners are not paying you enough to stay in business. You're not selling your product for enough money. You're giving it away. How do you get discipline? You know how you get discipline? Confidence. Confidence gives you discipline. Confidence gives you discipline, right? If you know something's going to work, you'll do it right. If you knew you were going to get to that target, you would have never sold it, right? If you saw the chart, if you could see the chart, if you could go, you could be in the future Rick or in the future Chuck and fast forward 6 hours and you saw where the chart was going, you'd have no problem hanging on because you knew where it was going, right? And when you start to get confidence about your chart patterns, you have more confidence to do it right. But then, of course, the next question becomes, how do you get confidence? And here's where we start getting into some esoteric talk a little bit, but it's hard to avoid. How do you get confidence? Anybody know how you get confidence? There's going to be 2 words appearing on the screen. I don't think anybody will have this because to me I'm not even sure it's the right wording, but it's the wording I picked to get this across to you. How do you get confidence? Perfect practice? That's not bad, Jamie. Well, I'm not going to make the circular argument of experience. Steve, you're pretty close. But by reproducible results, not just winning. Think about it. You don't get confidence from winning. If you flip a coin and you're betting on heads and it comes up heads 6 times in a row, do you have confidence the next one's going to be heads? No, you don't, right? It's winning through reproducible results. Does that make sense? How do you get reproducible results? Well, now we come to the magic words. By having a plan that you know, that you understand. The antidote to all psychological issues is a well-laid trading plan created by the user and followed with pure conviction and checked for proper use. If you go out, in other words, in simple English, you go out and learn what you're going to do. You outline exactly, once you get some experience, you practice it, you outline exactly what it is you want to do in the market. You go out and you do exactly what you're supposed to do, you perfect it, and you start getting confidence that, hey, when I do this and this happens most of the time. You start getting more confidence to take something to the target instead of just getting out right away because you got a small winner. It's a circular process that builds upon itself. And that's what makes it tough, because it is a circular process. And almost everybody gets on the circle going the wrong way. Right? Losing trades, lack of confidence, lost more money, risk more money, lose more money, lack of confidence, right? You got to do the other way. How do you get reproducible results? Well, you do it by starting off by initially paper trading and then very small risk amounts. So you can build a successful trading concept and then start building the money on top of the concept once you have it. You will never ever trade properly if you have more money risked than you are comfortable with, and you don't yet have a winning process in place. Does that make sense? Are there any questions? I went through a lot of stuff. If you joined late, by the way, if you probably noticed, if you are subscribed to DTS on YouTube, you probably got a lot of hits the last few days. I explained to you at several points that we were doing a few things at DTS, and there was a delay in posting some of the recent events that I've done, even going back probably 6 weeks. So a lot of those hit the screen. There's a couple more that will be hitting the screen. And the general policy is going to be these are all going to be posted 5 days after the event in general. Okay. If there's any question, let me know. So if you missed some of this, this will be posted probably on the weekend. Coming up this weekend, I do want to remind you guys, is the next cycle of the DTS Seminar Program. If you are ready, don't put it off. If you're not ready, again, I don't want you to jump in before you're ready to commit the time and effort needed to do it. Learn what you need to know beyond your beliefs. Good trading is not an accident. And then, of course, Friday, whether you do want to take the DTS Seminar Program or not, everyone is invited to attend Friday. Friday is the half-day class, which is the first part of the DTS Seminar Program. A couple people emailed about this also, because coaching and that kind of stuff. When you take a seminar program, you have my commitment to get you to understand this. Hang on a minute if you didn't go anywhere. Let me just make a plug for myself here for a minute. There are people logged in here right now taking seminars with me, right? Some of you guys. I'm going to make the comment that when people go to take a seminar program with me, I am not only available but committed to do everything necessary to get them to be successful. True? Some people email me stuff. I say, you know what, let's get in the chat room. Let's have a little coaching session. Let's get in there and do that. And some people here right now, I know 2 names. I've been in a chat room with you guys. It's what I do. I want to get you guys successful if you want to commit the time to learn what it is you learn. Thanks, Steve. What is the example of bad use of a stop? Too far, too close? Usually too close, Gary. In other words, thinking that any area is supposed to hold to a penny. Here, Gary, I'll tell you what, instead of me answering the question, let me give you some homework and you answer the question. Gary, do you currently swing trade or day trade right now a little bit? Are you doing any, even if it's on paper, are you doing something? You're not, okay. Well, then you can't do this. I was going to ask you to go look at your last 20 trades and tell me what would have happened if you would have doubled the stop on all of them to see what would have happened. People get amazing results when they look at something like that. So, yeah, generally most people treat stops like they end up stopping out of things that end up being successful. And they think that it's necessary to, there's a value to stop losses, but not the way most people do them. You have records. Okay. Gary, go back and take a look at a losing period of time. Take a couple weeks or take 20 trades. And, well, I don't know if you have the charts to go back, but the goal would be to go back and say, what if you didn't stop out all your stop outs unless they went twice the distance of your stop? So if you gave it 20 cents, pretend you gave it 40, and recalculate your profit and tell me what would have happened. The only time this doesn't work well is if you are, and not you personally, Gary, but if whoever I'm talking to is a really poor trader where everything you do just doesn't work. I mean, if you're taking all losing trades, I mean, nothing's going to help you. But if you're a reasonable trader and you're taking some reasonable trades, a lot of times people take a potentially winning record and make it a losing record just by nicking themselves out of everything. I had an example today. I was in something today. I managed to stop and went from being a full loser, and instead of being a loss, it turned out to be, well, at one point it became a 1R winner. It became a full winner at one point. I didn't necessarily handle it perfectly, but the concept of doing that saved 2 risk units of money. Yeah, that's the problem. I was wondering, Gary, if you can go back that far or not. But that would be the concept of what you'd want to do that I ask people to do. Delayed light bulb, it's better than never. When you go red, you're no longer right. And you know what, Carmen? I mean, another thing even beyond that is, I mean, just to be purely factual, your comment you just made isn't even necessary if you are following a trading plan properly, right? Because there is no issue about whether the next trade is the best trade or any trade because it's not in your plan to do. Now, naturally, there's always going to be some subjectivity. I guess you could argue that you're following your plan, but your standards change tremendously in order to get the next trade out the door. But that's something you have to identify at the end of the day and say, hey, you know what? That was not the trade I wanted to do. I justified it during the trading day because I wanted to do it, but hey, that was a mistake, and that's what you have to do at the end of the day. Yes, Odie, absolutely. Long-term, short-term. Matter of fact, I put out a long-term letter as well that's doing really well, but it is for long-term, short-term. It doesn't matter at all. We talk about both. There's examples of both. It even works for Forex or whatever. I personally trade equities and futures some, but it can be used on anything. The essence is, Odie, we are looking at a chart. And if you can picture a chart with nothing on the right and nothing on the bottom, just volume and candlesticks and a couple of moving averages, that's what we're really learning. So it really doesn't matter if you're looking at minutes or days or months or weeks. All the concepts apply. The daily chart is a couple of quirks because things gap, but other than that, things are the same. And it is absolutely intended for managing your own long-term money. Or if you want to learn to day trade occasionally, day trade for a living, whatever you want to do. If you have any questions, feel free to email me. Sorry, I was essentially done at about 5 after 6, so I didn't run too far over, but like I said, there was an awful lot of information to go through today. There you go. Well, Carmen, you know what? You know what else you can say to it? Is why not just say go walk around the block? Because when you say no trades for 5 minutes, if you're sitting there looking at the screen, Carmen, see, you need to disengage your brain. When you have a problem in this front of the screen, guys, I'll sit here and take questions all you want. Officially done the presentation if you guys want to go, but I'll sit here and take questions as long as you want. But Carmen, for those of you that day trade, true or false, if you walk away from the screen for 10 minutes, you come back with a totally different perspective. Is that true or false? If you disengage totally and then come back, you will have a completely different look at the screen. You may have been pushing yourself to have a bullish bias. You come back and you say, what the heck am I doing? Things are falling like crazy. What am I looking at? That trade was my favorite this morning, but why am I looking at it now? It's not doing anything I wanted it to do, right? So when you run into a problem, Carmen, if an issue is you get mad at a losing trade, your policy should be automatically, losing trade closes out, you leave. You leave for 10 minutes. And you know why you don't want to leave, Carmen? Do you know why? And again, I don't mean you, Carmen, you. I mean you, all of you. Why do you not? Right, exactly, Mark, exactly. Because you're afraid you're going to miss a trade. Let me tell you something. Until you accept this, especially as a day trader, you will never be successful. Here's what you have to accept. You are missing a trade every single 5 seconds of every trading day. Do you know that? There are 2,000 stocks you could theoretically day trade, maybe 1,000 that are doing at least $1 million or more. There's 1,000 stocks you could day trade. If you come down to a 1-minute chart, you are missing a trade every second of every day. Do you realize that? Every second of every day you're missing a trade. So what? They're not the trades that are in your sweet spot. They're not the trades you want to do. What you need to realize is that you have your list, you have your time, you hit when everything is right, and when it's not, you back away and you come back at the next right time. You should never fear missing out, because either, depending upon your perspective, either there's nothing to miss out on, or you're always missing everything every second of the day, so who cares? You could never, ever be afraid to walk away from the screen. Matter of fact, I think probably one of the biggest, I was doing really well, but I think the biggest accelerating breakthrough for me was just accepting the fact that I can just get up and walk away any minute of any time of the day and I just don't care anymore. Just don't care. Because you know what? When I come back, if I want to, I'll find a great trade, or I'll know that I don't have a great trade and I'll do nothing. Does that make sense? If you are always glued to the screen because you're afraid of missing out, you'll be a losing day trader. It's guaranteed. There's just no two ways about it. And people in the room with me today, right? I was disengaged after 10:30. Had a good day today. I was about double the goal at 10:30, and right, you guys in the room with me, I said I'm done. Now I said there's one stock I'm going to look at when I came back at lunch, and I ended up doing that. It lost a quarter of an hour, no, it lost half an hour, and then I redid the one I was in, and it made a little bit. So for the whole afternoon, I ended up almost up 2 hours. But the whole afternoon, I was just disengaged. I left for a while. I looked at the screen. Just after 10:30 today, I felt there was no odds. I felt the market was going to do exactly what it did. The stocks that I brought to the market played out, didn't play out, were worthless to me, and I just decided there wasn't any great odds left. And you have to be able to do that in a lot of days. And that's where everyone can still have issues. I mean, that's where anytime if I have a losing trade or a losing day, it usually comes down to that. It's because I push too hard. It comes back to the saying that I have. I think there's so many things you guys learn that are stated by people who are still a level or two short of really being good. And one of those things that people say a lot is never take anything but perfect trades. And boy, that's a great thought. It's a great concept. It's a great theory to say that. But when you really understand trading and you're in the trenches every day, if that's what your motto is, I think you're going to lose. Why are you going to lose? It sounds like a great saying, doesn't it? Only take perfect setups, right? But why are you going to lose? I have nothing wrong with it in theory, but it's kind of like saying, well, buy low and sell high. It's like, okay, that's the goal. Sure, my goal is to take perfect setups. But yeah, number one, right, what is perfect? What is perfect? I mean, even if you define it well, isn't there always that spot where you're 1/1,000,000th of a millimeter on this side of being perfect or the other side of being perfect? And then you have to decide, well, is that perfect? You know what I'm saying? There's always a line in the sand, and you can always be one grain of sand on the other side of the line. And you always have to say, well, is that good enough, right? So you're always answering the question. And number two, what if you don't find perfection for 4 days in a row? What do you do? See, I think the better state of mind, and again, it's kind of like, I'd almost like to do a series of sayings that you learn. Here's the first thing you learn, and what everybody thinks the top-notch saying is only take perfect setups. That's the epitome. That's not the epitome. That's the silver standard. You know what the gold standard is to me? Trading is about learning how to handle the less than perfect setups we're dealt every day. Does that ring true to anybody? Trading is about learning how to handle the less than perfect setups that we're dealt every day. This theoretical looking for perfection, yeah, it's nice in a textbook, but it doesn't help you in the trenches every day, right? Because we just don't have it, and even if we do, we don't always know it. And you don't have to have perfection. You need, again, what I call a moment in time is what you need. I'd rather take a great entry on a so-so trade than a so-so entry on a great trade. I'd take that any time. Because the truth of it is we never know perfection. The goal of understanding charts is not to understand them to the 100, well, our goal is to understand them to the 100% level, but we never have 100% probabilities. We are never that sure what a chart's going to do. It's probabilities, it's not absolutes. So understanding how to handle areas is more important than the ultimate decision whether you're going higher or lower. There's a great example of that on a chart today. What was the, do I have my charts up? You guys want to look at a chart real quick? To look at an example? I'll give you an example of what I mean. Because when you hear me say the direction of the stock doesn't even matter, it's the moment in time, some of you are probably saying, what the heck are you talking about? That's the stupidest thing I ever heard. Well, Here you go. Got charts up? Can you see charts okay? HDS. 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 Here. I don't even want to get into. Here's my point on HDS. This gap here is kind of an either way gap, right? And my point is, what I was trying to say is, we could sit here as traders and argue all day long whether or not this is bullish or bearish, but you know what? I really don't care. At some point, when you have a pattern like this, you know what is perfectly acceptable to do? I'm perfectly fine if you want to go long right here. Do you see where I'm pointing? I'm fine if you want to do that. I'm also fine if you want to short this or short this. I ended up shorting this. That's what I did. I shorted right there. Because this, this stock could drop off the charts. It could rally back all the way. We're in an area here we just don't know. Tomorrow we'll know more probably. So my point is, and this is a good example, no matter how much you know charts, when you're right here in the morning, you cannot, nobody could tell you if this is going to close above or below that level. We just don't know, right? So the important thing is that if you feel it's going higher, to get a great entry, to get in down here, make the commitment to say, yeah, it's higher, and I'm going in here. And you make some money or you break even. Or, no, it's going lower, I'm shorting that rally. In other words, don't wait until you're up here and then go long because you think you just broke out. And don't wait till you're down here to go short because you just broke down. You see what I'm saying? So if you can't make up your mind what to do, you go to the next chart. If you see a bias on the chart, then you get a great entry. And the great entry is more important than being right or wrong in the direction. Does that help make sense to what I'm saying? So at the end of the day, if you sent me a chart and you said, Paul, I shorted this, I'd say great trade. If you said I went long this, I'd say great trade. You say, Paul, well, it didn't really work. It barely moved. Well, okay. Chart didn't go anywhere, but you did the best you could with the chart. If that was a chart you liked and you felt you had a bias on it, great, right? Yeah, it comes back, Mark, to the saying. That's one of my favorite sayings, and it's also been well published by what's his name, that it's trading is not about being right or wrong, it's about making money, right? So I could have shorted this here, right? And it could have run to 42.50, and somebody in the room, new to the room, said, boy, what an idiot this guy is. He wasn't just wrong, he was wrong times 50. But I still lost my one risk unit, right? Or whatever I lost, or less than that. Actually, the way I took this trade, I was not going to lose more than about a third, like I did, the way that I took the trade. But it's not about being right or wrong in this case. Now, you could argue all day if you want to. You should have known this is going higher, should have known it was going lower. But, I could line up 30 of the best traders, and we could argue about where the stock's going after the open. I thought it was more of a bearish gap than it turned out to be. So that's why I wanted to short this. But I didn't get in. I didn't get in up here. I just wasn't looking at it at the time. And so I took this. What time? I forgot. I took it here and there. So it's not about right or wrong. It's that moment in time to have a great entry to play out the direction you think it's going to go at that moment. And that's what I mean. I'd rather have a great entry to a so-so play than a so-so entry to a great play, because there is no such thing as a great play in a vacuum. So anyways, we done? I don't see any questions. All right, see you guys.